Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video for October 6, 2023. Let's get started. U.S. non-farm payroll rose by a greater than expected 336,000. They're expecting 170,000. Moreover, the prior months were revised higher as well. The unemployment rate, however, remained unchanged at 3.8%. Still, it's 3.8%. That's just off the record low levels, I think, at 3.5%. So, strong U.S. jobs report sending the U.S. dollar higher. Taking a look at the euro versus U.S. dollar. This is the hourly chart. We're just falling below the 100-hour moving average. That's a blue line in this chart at 1.0503. Stay below that level keeps the bears more in control. We are testing or looking at this swing area between 1.0483 up to 1.0496. Move below that level opens the door for a move toward our low prices for the week at 1.04489. Taking a look at the daily chart in the euro versus U.S. dollar. This 1.0483 level also corresponds with the low price of this swing area. Get below that level opens the door and starts to the downside. Once again, earlier this week we were below those levels, but could not sustain the momentum. So making it below the 104.83 level would then open up the door for a move toward the 50% midpoint of the move up from the September 2022 low. That level comes in at 1.04053. Those are the targets and the risk levels now for the euro versus U.S. dollar. Remember, the 100-hour moving average. We probably want to stay below that level, 1.0503. A closer or a more conservative risk level might be, I guess, somewhere around this 15-ish type area here, but certainly we don't want to go above the 200-hour moving average. That would be a no-no for bears looking for more downside, more dollar buying. Let's take a look at the dollar versus yen next, and it is also moving to the upside here, breaking above its 100 and 200-hour moving average in the process and moving toward our next target level. That target level comes between 149.47 and 149.50. Right around this area right here. You can see it was a ceiling through here and then became a floor here before moving higher. When we fell to the downside, we fell below the 100-hour moving average and moved lower. Get above this level right here would have traders looking toward I have it earmarked this 149.70-ish type level up here. Again, this was the high price going back to last week's trading. Also, we sort of traded above and below it through here with the market trying to hold support against it. So get above that level opens the door for the 150 level. Remember, we had that a spike up on the data on Tuesday's trade. That was the JOLTS data that pushed the market above the 150 level, and then we went all the way to the downside on concerns that the Bank of Japan would intervene. We may have to test that 150 level again in the dollar versus yen going forward, and test the resolve of the Bank of Japan. Will they tolerate that sort of strength in the dollar versus the yen, the weakness in the yen? So we will see, but the buyers are taking more control here and now trying to break above the next target at near the 149.47 level. Well, lots of volatility going on there. Let's take a look at the sterling versus U.S. dollar, and it too is moving lower, and in the process is breaking below its 100-hour moving average at 121.26. Stay below that level is more bearish going forward. The next target comes at this level right here. Comes at the 121.10 level. That level corresponds roughly with a number of different swing lows, including this one right here. We also found support here before moving to the downside right through here, and then on the break back above the level, we once again tried to find some support just below that level on Wednesday and Thursday. I'm trading here today, and as you can see, we're testing that level as I speak. Move below it opens the door for further selling pressure in the sterling versus U.S. dollar. Taking a look at the daily chart of that currency pair, the 120.76 level is another target to get through. That's the 38.2% retracement, the move up from the September low to the high that we saw in July. Keep that level in mind. Remember that after a trend type move, you want to see the price at least get through the 38.2% retracement. We did earlier this week, but it was only briefly, and we could not sustain the momentum. Then the very next day, the price moved back above the 38.2% retracement. So getting below 120.76 is important for the sterling versus U.S. dollar. So there you have it. Look at some of the major currency pairs as after the U.S. jobs report. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.